President Trump just signed an executive order that could change your monthly payments. And if you're receiving Social Security, SSI, SSDI, VA benefits, or waiting for stimulus money, this affects you directly. We're talking about potential payment increases, faster processing times, and changes that could put hundreds more dollars in your pocket every month. Some of these changes are already happening. Others are proposals that need congressional approval, but either way, you need to know what's coming and when to expect it. The stakes are high because we're looking at the biggest changes to federal benefits in over a decade, and missing this information could cost you money or delay benefits you're entitled to receive. Stay with me till the end because I'll break down exactly which changes are guaranteed, which ones are likely, the specific dollar amounts involved, and the timeline for when you might see that extra money hit your account. This isn't just another government announcement. This directly impacts your monthly budget and your financial security. I'm Terry, and I've been explaining Social Security and Medicare updates in plain English for over 8 years. I cut through the government jargon and break down exactly what these policy changes mean for your monthly budget. Whether you're already receiving benefits or planning for retirement, I make sure you get the facts without the confusion. I've helped thousands of viewers understand complex benefit changes and avoid costly mistakes that come from misinformation or incomplete explanations you'll find elsewhere online. Welcome back to all my regular viewers, and if you're new here, you're in the right place for clear, honest information about your benefits. I'd love to know where you're watching from today. Drop your state in the comments below. It helps me understand where my viewers are and what local issues might be affecting your benefits. I read every comment and often use your questions to create future videos that address the specific challenges you're facing with your benefits. Today, I'm covering 5 major areas from this executive order that will impact your monthly payments and benefit processing. First, the immediate Social Security payment processing changes that start this month and how they'll speed up your applications and appeals. Second, the proposed benefit increases, including who qualifies and the exact dollar amounts we're talking about. Third, the SSI and SSDI modifications that could add significant money to your monthly check and eliminate barriers that currently reduce your benefits. Fourth, the comprehensive VA benefit improvements for veterans, including disability compensation increases and expanded survivor benefits. And fifth, the timeline for additional stimulus payments, who's eligible, and when you might actually see this money. Each section includes real dollar amounts and examples, so you know exactly what to expect and can plan accordingly. The executive order mandates immediate changes to Social Security payment processing that are happening right now, not proposals for the future. Starting this month, Social Security Administration offices must process new applications and appeals 30% faster than current timelines. This means if you've applied for benefits and are waiting, or if you filed an appeal that's been sitting in the system, your case should move through significantly faster. The order specifically targets the backlog of disability determinations and appeals that have left thousands of people waiting months longer than necessary for decisions on their cases. Here's a concrete example of how this impacts real people. Maria from Florida applied for Social Security disability in October 2024 after a stroke left her unable to work. Under the old system, she'd typically wait 4 to 6 months for an initial decision on her application. With these new processing requirements, her case should be resolved within 3 to 4 months, potentially getting her first payment by March instead of waiting until May. If her monthly benefit calculation comes to $1,400, that's $1,400 to $2,800 she receives sooner than she would have under the previous system. For someone living without income while waiting for disability approval, getting benefits 2 months earlier can mean the difference between keeping their housing or facing eviction. The processing improvements extend beyond just faster decisions. The executive order requires Social Security offices nationwide to extend their hours and offer weekend appointments to reduce the backlog of in-person services. This addresses a major complaint from beneficiaries who couldn't get appointments during regular business hours or had to wait weeks to speak with someone in person about their cases. Local Social Security offices must now stay open until 7 p.m. at least 2 days per week and offer Saturday appointments twice monthly. If you've been trying to get an appointment to discuss your benefits, resolve an overpayment issue, or apply for benefits in person, call your local office now to schedule during these expanded hours. Additionally, the order mandates faster processing for critical situations like expedited disability cases for terminal illnesses, emergency advance payments for people facing homelessness, and urgent appeals for people whose benefits were incorrectly stopped. These cases, which previously could take weeks even in emergency situations, must now be resolved within 10 business days. For someone whose benefits were incorrectly terminated and who's facing immediate financial crisis, this change could prevent homelessness or inability to afford essential medications. The executive order proposes a $200 monthly increase for all Social Security recipients, but here's the crucial distinction you need to understand. This requires congressional approval and is not guaranteed to happen. It's a proposal that the administration is asking Congress to fund and implement, not an automatic increase that's already been approved. Understanding this difference is critical because many people are already budgeting for money they may never receive. If Congress does approve this increase, here's exactly how it would work and what it means for your monthly budget. Current recipients would see their existing monthly benefit plus an additional $200. So, if you currently receive $1,800 monthly in Social Security retirement benefits, you'd get $2,000. If you receive $900 monthly, you'd get $1,100. The proposal covers all Social Security retirement benefits, survivor benefits, and Social Security disability insurance payments. This means whether you're receiving retirement benefits, widow or widower benefits, or disability benefits through Social Security, you'd get the same $200 monthly increase. Let me put this in perspective with real numbers. The average Social Security retirement benefit in 2025 is approximately $1,800 monthly. A $200 increase would bring that to $2,000, which is a $1,300 increase over the course of a year. For someone receiving the minimum Social Security benefit of around $900 monthly, the increase to $1,100 represents a 22% boost to their income. For many seniors living on fixed incomes, this could mean the difference between choosing between medication and groceries or being able to afford both. However, the political and economic reality is that this proposal faces significant challenges. The administration estimates this increase would cost approximately $300 billion annually, which means Congress needs to either find $300 billion in budget cuts elsewhere, raise taxes to pay for it, or approve deficit spending. Previous similar proposals have faced intense opposition from fiscal conservatives in both parties due to cost concerns and questions about long-term sustainability of Social Security if benefits are increased without corresponding revenue increases. The timeline reality check is important for your planning. Even if Congress acts quickly and approves this increase, implementation would take 6 to 12 months due to the complexity of updating Social Security's computer systems and recalculating millions of benefit amounts. Don't expect to see this money before late 2025 at the earliest, and more realistically, if it happens at all, it would likely begin in 2026. Do not change your budget or spending plans based on this proposed increase until it's actually approved by Congress and you see implementation dates from Social Security Administration. For supplemental security income recipients, the executive order proposes several changes that could significantly increase monthly payments and reduce restrictions that currently limit benefits. The most important change is eliminating the marriage penalty that currently reduces benefits when SSI recipients get married. Under current rules, if two people receiving SSI get married, their combined benefits are reduced because the government assumes they're sharing living expenses. The proposal would eliminate this reduction, allowing married couples to receive the same total benefits they received when single. The order also proposes dramatically increasing asset limits that haven't been updated since 1989. Currently, if you're single and receiving SSI, you can have no more than $2,000 in assets, including savings accounts, checking accounts, and personal property. If you're married, the limit is $3,000 combined. The proposal increases these limits to $10,000 for individuals and $20,000 for married couples. This change acknowledges that $2,000 in 1989 had the purchasing power of about $4,000 today, and that people need higher asset limits to handle basic emergencies without losing their benefits. Here's a real impact example of how these changes would help actual SSI recipients. John receives $943 monthly in SSI and lives in subsidized housing. His 15-year-old car breaks down and needs $4,500 in repairs, but the mechanic tells him it's not worth fixing and he needs a replacement vehicle that costs $4,000. Currently, if John buys that car, he'd exceed the $2,000 asset limit and would lose his SSI benefits entirely until he spent down below the limit again. This forces him to either go without transportation, which might cost him his part-time job, or buy a cheaper, unreliable car that will break down again soon. Under the proposed changes, he could buy the $4,000 reliable car and continue receiving his full $943 monthly payment without interruption. For Social Security disability insurance recipients, the order proposes eliminating the 5-month waiting period that currently delays benefit payments. Under current law, if you become disabled and get approved for SSDI, you must wait 5 months from your disability onset date before receiving your first payment. This waiting period was created decades ago based on the assumption that people have savings or other resources to support themselves during short-term disabilities. But the reality is that most people applying for SSDI have exhausted their resources by the time they apply and desperately need immediate assistance. The impact of eliminating this waiting period would be substantial for newly disabled individuals. Lisa becomes disabled in January due to a serious car accident that leaves her unable to work. She applies for SSDI immediately and, because her case is straightforward with clear medical evidence, gets approved in March. Under current rules, she has to wait until August for her first $1,600 payment, meaning she loses $8,000 in benefits during those 5 months of waiting. The proposed change would allow her first payment to begin in March when she's approved, providing crucial financial support when she most needs it while dealing with her disability and inability to work. This waiting period elimination would also help people who are approved for SSDI after initially being denied. Currently, if someone is denied initially, appeals, and wins their appeal after 18 months, they still have to go back to their original disability date plus 5 months to determine when benefits begin. This can create situations where people win their appeals but still face months of additional waiting for payments. The proposed change would begin payments immediately upon approval, regardless of how long the application and appeal process took. Veterans would see both immediate improvements and proposed benefit increases under this executive order. The immediate changes focus on faster processing of VA disability claims, with a specific goal of deciding 90% of claims within 90 days instead of the current average of 120 days or more. This processing improvement is happening now and doesn't require congressional approval. The VA is required to hire additional claims processors and extend office hours to meet these new timeline requirements. The proposed changes for veterans include a 10% across-the-board increase in VA disability compensation rates. This would apply to all veterans currently receiving VA disability benefits, regardless of their disability rating percentage. For a veteran receiving 100% disability compensation at the current rate of $3,737 monthly, this would mean an additional $374 per month, bringing their total monthly payment to $4,111. For a veteran with a 30% disability rating, currently receiving $596 monthly, the 10% increase would add about $60 monthly, bringing them to $656. These increases would also apply to veterans receiving individual unemployability benefits, which provide 100% compensation rates to veterans who can't work due to service-connected disabilities, even if their disability rating is less than 100%. A veteran receiving individual unemployability payments would see the same $374 monthly increase as a veteran with a 100% rating. For veterans, survivors, and dependents, the order proposes expanding eligibility for dependency and indemnity compensation, which provides monthly payments to surviving spouses and children of veterans who died from service-connected conditions. Currently, surviving spouses must prove the veteran's death was directly caused by their service-connected disability, which can be difficult when veterans die from conditions like heart disease or cancer that may be related to military service but aren't automatically presumed to be service-connected. The proposal would expand DIC eligibility to include deaths from certain conditions that commonly affect veterans, such as heart disease in veterans exposed to Agent Orange, or certain cancers in veterans who served in specific locations, even without direct proof that the service-connected disability caused the death. The most important takeaway is distinguishing between what's certain and what's proposed. Plan your finances around your current benefits, not potential increases that may never materialize. Use official government websites for accurate information and avoid social media sources that make unrealistic promises about automatic benefit increases. The reality is that while these proposed changes would provide significant financial relief for millions of Americans receiving federal benefits, the political and budgetary challenges they face make their passage uncertain. Understanding these challenges helps you maintain realistic expectations while still advocating for changes that would improve your financial security. Thank you for watching and trusting me to explain these complex changes in a way that helps you understand what's really happening with your benefits. If this video helped clarify the difference between guaranteed improvements and proposed increases that require congressional action, please hit the like button and subscribe for more Social Security and Medicare updates that cut through the confusion and give you accurate information you can rely on. Share this with family members or friends who receive these benefits because they need accurate information too, and there's so much misinformation circulating about automatic benefit increases that aren't actually automatic. The more people who understand the real situation, the better decisions everyone can make about their financial planning and advocacy efforts. My next video covers the new Medicare changes for 2025, including prescription drug cost reductions that could save you hundreds of dollars monthly, changes to Medicare Advantage plans that affect your coverage options, and updates to Medicare Part B premiums that impact your Social Security payment amounts. These changes are actually happening and will affect your benefits and healthcare costs. So click here to watch that now, and I'll see you there with more information you can use to protect and maximize your benefits.